So we have the allowable and disallowable expenses for hydrocarbon tax purposes to be as follows. Start with first, the decommissioning and abandonment cost. The commissioning and abandonment cost will be allowable provided it is approved by the commission. That is, for oil company, they do construction of some assets where they need to do their oil exploration. However, when they are done with their operation, some contracts will require them to decommission it. Some they may have to abandon. Whether they are decommissioning it or they want to abandon it, it will come at a cost. So any money they are setting aside to meet this future obligation, provided it is approved by the commission, it is allowable. Do we understand?
Yes, sir.
The next is the rent they pay. For rent, we are not talking, they don't rent, the rent they pay is what they use to get their licenses. Either the petroleum mining lease or the petroleum prospecting license. Whatever they pay for those licenses is what we refer to as rent. It is also an allowable expense. They incur expenses for repairs of plant and machinery. So far, they are using those things for petroleum activity, and such expense is what allowable. If they incur costs for the acquisition of geographical, geological, and geological, and geochemical data and information about oil deposit is allowable. Any royalty they incur and pay within a period in respect of crude oil and associated gas is allowable. Any tangible and intangible drilling costs that is directly incurred in connection with the drilling of first exploration well and first two appraisal well in the same field, whether the wells are productive or not, will be allowable. What do we mean by this? When companies get to the oil field, at times they might first need to drill an appraisal well. To the best of my knowledge, the appraisal well is for them to know the extent of oil deposits in that area. Why, when they now know what the extent of oil deposit, they go ahead to drill the exploration well. Now, both the tangible drilling cost and the intangible drilling cost that they incur on drilling the first two appraisal well and the first exploration well are allowable as an expense. But after that, any cost incurred in drilling well, both tangible and intangible, will be what? Capitalized. Do we understand?
Yes, sir, but I want to confirm something. You mentioned of drilling well, like is it just one or how many drilling well is allowable?
Well, their activities will determine the number of wells they will do. But whatever number of wells they drill, it is the cost of the first appraisal well, first two appraisal well. Like let's say they do 7 appraisal well now. It's only the cost of the first two appraisal well that will be allowable as an expense. Others will be capitalized as an asset. For
Okay, sir.
exploration,
Noted. Thank you.
for exploration, it is only the cost of the first exploration well that will be treated as an expense. Others will be what? Capitalized. Do you understand?
Yes, sir.
That is for oil exploration. That is for drilling cost. Any liability that is incurred by the company or paid to government, be it federal government, state government, or local government, by way of levies, stamp duties, and fees are allowable. If they incur cost for gas reinjection well, okay, gas reinjection is when a company is doing exploration of crude oil now, times they will explore gas with it. Now for some companies, because they don't have the facility to process the gas and make it a product for them to sell, they have two options. It's either they flare the gas. Flaring the gas simply means burning the gas, wasting it, or they what? They reinject it back into the well. Reinjecting it simply means like more like pouring it back into the well, but it's not that simple. Now, if they incur cost to reinject natural gas, it will be allowable, but it is subject to ratification of the commission. But if they incur cost to flare gas, that will be disallowable because it's more or less you are wasting resources. So then, any amount that is contributed to any fund, scheme, or any amount that is contributed to any fund, scheme, or arrangement approved by the commission. And you know, when we keep mentioning commission here, we are referring to Nigeria Upstream Petroleum Regulatory Commission. An example of those these things are what? Contribution to the host community development trust, the Niger Delta Development Commission, the Environmental Remediation Fund. All of these are allowable. Are we getting it? Do we understand? I want to move to disallowable expenses.
Mr. Mr. Goodwin,
I can hear you, sir.
yes, sir. In that case, all the allowable, we add it back to the net profit, not so?
We
We add
deduct it,
with
yeah,
the
the
allowable.
we less it from the taxable income. But if
Uh,
we are using indirect method, we don't do anything to the allowable. The disallowable will be added back to the net
okay,
profit.
we less the unlike company come that you add the disallowable. In that case, you less the disallowable.
Mm-mm. Don't get it
Unlike
wrong now.
company, yeah.
Yes, we compute tax liability in two ways. It's either we use direct method or indirect method. If we want to use direct method, we'll say taxable income less allowable expenses. If we want to use indirect method, that's when we do net profit, add back disallowable expenses, less non-taxable income, and we arrive at our
No,
profit.
that's
So I'm
in
saying
respect of company income tax. But
the
when
same
it
thing
comes
is
to
applicable
petroleum,
here. The same thing is applicable. It's either you do taxable income, less allowable expenses, or you do the net profit, add back disallowable expenses. But in most cases, we
so
use that direct method of taxable income less allowable expenses because it is easier to do that way. If not, we might run into trouble. Okay.
Okay.
Having said that, the disallowable expenses are what? Expenditure and fees incurred as penalty for flare of natural gas. I just explained that. Any expenses or disbursement that is not only reasonably, exclusively, and necessarily for the purpose of petroleum operation. I don't think I need to explain wholly, reasonably, exclusively, and necessarily again. So far, the company is not the one paying the entire money. It means it is not wholly their own. So we will not charge, what is it called on it? We will not allow it. The portion they did not pay, we will not allow it for them as allowable expense. Reasonably, if they can get, if they can, if that, let's say they paid 30 million for an expense now, and we realize that they can actually get that same thing for 20 million elsewhere, but they went ahead to get it for 30 million, then it shows that they're not reasonable. The excess of the amount over being that is makes it being unreasonable, we disallow it. Exclusively is, are they the only one enjoying the benefit? When they are not the only one enjoying the benefit, we have many other people that are also enjoying the benefit with them. We do what? We disallow it. We disallow it. We disallow the portion that other people are enjoying, that they are not the one enjoying it. And when we say enjoying, let's assume now they have two divisions. One division is working on petroleum, another division is working on maybe refinery. You know, it is only the petroleum, the exploration that will be paying hydrocarbon tax. So any portion of the expenses that is meant for the refinery section will be disallowed here because it is not exclusively for petroleum operation. The necessary, do they actually need to incur such expense for them to carry out their business? Is it clear? So the next one we have is head office cost incurred outside Nigeria. If we have head office cost incurred outside Nigeria, like affiliate, shared cost, research and development cost, and any other indirect production cost, they are all disallowable. Depreciation is an indirect production. Depreciation is disallowable. Expenditure incurred for the purchase of information relating to petroleum deposits other than the acquisition of geographical, geological, and geochemical. We've already explained that those three are allowable: geographical, geological, and geochemical. They now incurred on any other geo or any other thing to be disallowable. Any capital employed in making improvement as distinct from repairs. So when you are improving the assets, maybe you are buying additional parts to it that will increase its useful life or its productivity, to be disallowable. Then we have what? Any sum that is recoverable under a contract of indemnity or under insurance. You know, if you have insured an expense and you incur such expense, what it simply means is you get your money back. So if you are getting your money back, then such expense will not be treated as what? Will not be allowable. If we have any capital withdrawn or sum employed or intended to be employed as capital, yes, any drawings by the shareholders or this thing will not be allowable for tax purposes. We have interest on borrowing, financial and bank charges, arbitration and litigation charges, and bad debt. They are all what? They are all not allowable. We have tax imputed. What is tax imputed? Tax imputed is where maybe I enter into a transaction with Wasiu now. The transaction, Wasiu is supposed to deduct 10% withholding tax. And I told Wasiu that, don't deduct my money. Imagine renting house in Lagos and you told your landlord that you deducted withholding tax. if you don't sleep outside or sleep under the bridge, I don't know what will cause it. So when we have expenses like that, if we impute tax, that is, we now gross up that money after paying what the person said they want, we now gross it up for tax purposes so that we can also be compliant. That gross up portion will not be allowable for tax purpose, for hydrocarbon tax purpose. Any money we incur in respect of tertiary education tax or company income tax or any other similar taxes will not be allowable. This is because before we used to treat education tax as one of the allowable expense for petroleum profit tax, but now they say it's not allowable again. Any rent or cost of repairs that is not for the purpose of petroleum operations is not allowable. All custom duties are disallowable. Any private expenses are disallowable. Capital expenditure is disallowable. Tangible and intangible drilling costs that has been capitalized, it cannot be allowable as an expense again. Any of these bonuses, production bonus, signature bonus, paid for the acquisition of all of these, they are disallowable. Loss on disposal of assets is disallowable. Legal expenses like cost of defending traffic offense, gone. Cost of defending a tax appeal, gone. And renewing a long-term lease. Then, if we have acquisition of a new lease, whether it is long or short, then we have any contribution to pension, provident, or other safety scheme or fund which may be approved with or without directives. So if we contribute to any pension scheme or any this thing, it will be disallowable because this contribution is allowable under company income tax. So custom duties, they are disallowable. We've spoken about that. So the next thing we'll now be looking at is the next
Sorry,
thing
sir.
will
Did you
be,
say custom duty is disallowable? Good evening. Did you
yes,
say
it is
custom duty is
disallowable.
allowable under income tax?
It is disallowable. It is disallowable.
Under income tax.
In both cases, it is disallowable.
Okay, sir. Thank you.
So, having explained these expenses, there's one more thing I would like to explain, which is what we call CPR limit, cost profit ratio limit. And the cost profit ratio limit is also one important aspect that we cannot overlook. So what cost price ratio limit is all about is the cost price ratio limit is what helps us to keep our drivers in check. Cost price ratio limit is what we use in ensuring that the whatever expense we are charging in any year doesn't swallow the entire profits that is available to be subjected to tax. So profit cost price ratio limit reduces or moderates the expenses that is to be incurred for a month, for a year. Now, how do we calculate it? We look at 65% of gross revenue at measuring point. Then we now look at the operating expenses we've calculated, all of it. We had capital allowances, both brought forward and for the year to it. Then we now less other operating expenses like rent, royalty, contribution to scheme approved by the commission, post community development trust fund, environmental remediation fund, Niger Delta Development Commission, other similar contribution, but production allowances are not subject to CPR limits. So what we do is, if we do this CPR limit and there is a difference, then what we do is, for the difference in our account, I would like to, sorry. So once we do the CPR, if what we get using CPR is lower than what our expenses, we can only take as much as that CPR for as as allowable expense for that year that will be deducting for the bus. Sorry. So once any CPR, any expense that is outside the CPR limit, we carry it forward to the next year. We carry it forward to the next year. So in the next year, we add it to what will be what we'll be using for our calculation, and so on and so forth. So let's look at question, and that way we can quickly round up our class. Who is reading illustration 8? Reading illustration 8.
Okay, let me take it. Good evening. Simony Petroleum Nigeria Limited is a subsidiary company of a foreign oil and gas company. The company has been involved in petroleum prospecting and exploration upstream for both local and foreign sales over the past 10 years. Sorry, I'm trying to adjust my phone. Not seeing it very good. Okay, at the corporate board policy, the management meets and consider the reports in respect of these operations a yearly basis. The result for the year end 31st December 2023 of the company as prepared by the financial controller of this all figures considered correct. Stabilizer means screw up. We have value of solid oil sold for export local. Okay. Okay, the following information was provided. The monthly local, the monthly physical oil and gas price at each of the measurement points has been approved on the report priority and based by the Nigerian upstream petroleum revenue. Unabsorbed losses brought forward from the previous year outgo for the previous year is at 5,000. The company operates in an offshore area. Petroleum allowance has agreed with FIS is 18 million. The unrecouped capital allowance for the previous year were and the current year is 45 million. This was also agreed with FIRS. Administrative expense considered of natural gas, okay, down to other allowable expense. Number six, repairs and maintenance expense, repairs and pipeline, repairs and plant, improvement of capital building, just be capitalized. Miscellaneous expense included tenement levy paid to local government, contribution to NDCC, contribution to host, donation to widows of other association. Please help me scroll up again, sir. Everything is total to 2.5 million. Please help me scroll up, sir. I'm done with seven. Then eight is allowance for doubtful debts included specific general and bad written of um I'm looking for required though. Okay, you are required to compute the following and give appropriate comments where applicable. The adjusted profit, taxable profit of the company relevant here. The adjusted operating cost of CPR limit. Lastly, the tax liable accordance with provisions of the Petroleum Industry Act of 2021.
Okay, thank you very much for that. So we are to attempt this question. Minino Petroleum Nigeria Limited. We'll have the solution will occur this way. We'll have Minino Petroleum Nigeria Limited. Computation of hydrocarbon tax for what year of assessment? 2023 year of assessment. So we have figures naira quoted in thousands. We'll have the income, the taxable income. Sorry, taxable income. Taxable income will have for hydrocarbon tax only 4 income to tax. Only 4 income are what we only 4 items are what we see as income that we subject to tax. The first one is the value of oil sold in the export markets. Value of oil sold in the export market, which year they gave us to be 900, 380. Then the next one is the value of oil sold in the local markets. Value of oil sold in the local market. That's 223.
Please, sir, is it, hello, sir, is it recorded?
Yes, sir.
Thank you.
The next one is value of gas sold. Value of gas sold, either export or local, it is also allowable. Then the last thing that is treated as income that will be charged is balancing charge. You see this other incidental income. If they don't tell us where it is coming from, we cannot know if it is taxable or not. So we'll leave it out. We'll leave that out. So what do we have as the submission for this? Okay. As for allowable expenses, we'll take it one after the other. Production cost. From all we read, I did not hear anything about production cost being additional information. Production cost is the cost of them doing the work, the petroleum activity work. So we'll bring that in. We have the tangible drilling cost of the first appraisal well. Okay. So we have tangible drilling cost of the first appraisal well. Don't forget, we have said that the cost of drilling the first appraisal well, first 2 appraisal well for the first appraisal well to be allowable. 18,800. Then the intangible dwelling cost. The intangible cost for the drilling of the first appraisal well is 17,600. Cost of gas reinjection well to be allowable. Okay, cost of drilling 3 appraisal well. Since we have already allowed 1, it is only 1 we'll be allowing more. So that will be what? So say 1/3 multiplied by what? The cost, the amount is what? 24,000. So if we do that, that will give you what? 8,000. Okay. The next thing we have is rent. 13,000. Okay. Royalty on export sales. Okay, so what do we have?
Hello, sir.
I'm with you, sir.
Royalty on export. Can you explain it, please? Royalty on export.
Yeah.
That
It's the same thing, the same way we calculated royalty in the last class, just that that royalty is associated with the volume of sales that is to be exported, or associated with the volume of sales that they sold in the export market.
is it royalty to community or to government?
It's royalty to government. It is government they pay royalty to. Is it clear?
Okay, so
They pay royalty, just like we calculated in the last class. That was on Friday. But
but
the
that one is
royalty is for what?
I think it's for community.
No, royalty is not for community. Royalty is for government. It's for government. Do you understand now?
Okay.
We continue. Royalty on local sales. You can see there was also royalty on local sales. 9,800. Then salaries and wages. 170,500. Okay. Head official cost. We said that one will not be allowable, Abby. We have repairs and maintenance. So repairs and maintenance, we have to be sure that what we are taking to be a repair is actually a repair. Repairs and maintenance. How much is it? It is 8,930,000. But we have some additional information on repairs and maintenance. We have repairs of oil and report on oil and pipe storage tanks, 6 million. Then repairs of plants, that will be allowable also, 1.5 million. But improvement to building will be disallowable because that should be capitalized. That will give us what? What do we have?
7.5 million.
7.5 million.
7.5 million.
We look at the next one. Custom duty, we said that one is allowable. Depreciation, disallowable. Interest on loan, disallowable. Allowance for that student, disallowable. Admin expenses. Admin expenses, what do we have? 79,200. Okay. The admin expense we have, what are the additional information on it? We're told that natural gas flare fee, that will be disallowable automatically. Clearing that, 10 million. Okay, we have what? 79 minus cost of gas flaring, 10,000. Then, okay. Aside that, transport cost is allowable. Cost of obtaining information about on existence of oil. We don't know what this is meant for, so we'll take it out because they gave us a specific cost for what? For geological. Okay. So having take that out, they told us other allowable, so we leave them like that. So what will this give us? So what do you say?
Ọlọ́run máa ní kó sọ̀rọ̀. Bá ṣubú lù ẹ́ ni o.
Hello,
Sorry,
please. You are
sorry,
not
sorry.
to Mike. What's the figure, please?
Brother, please help me press your
Please,
calculator.
can you
Brother,
help
please
me?
help me press your calculator.
Please, can you
Brother, please help me press your calculator. Please, can you? Brother, please help me press your calculator.
with the disallowable part of it? I know the natural gas flare fee is to be deducted, so I'm trying to do the calculation. Apart from that,
We have said that cost of obtaining information on oil existence is only where it is geographical, geological, and geochemical that it should be allowable. Now that we are having cost of obtaining information on existence of oil, that will not be allowable. But that one that they said expenditure for acquisition of geological information now, yeah, sure. That one will be allowed. Are we getting it? After admin expenses, we look at what? Stamp duties on increase in share capital. They specifically mentioned that anything that is going to government by way of levies, this thing should be stamp duty on increase in share capital. Stamp duty on increase in share capital. 1,000.
hello sir, it seems I'm missing
1,000.
some part. The network was just hanging from my end there, I guess. So I'm unable to hear some part of it.
Do you want to ask? Miscellaneous expenses. Miscellaneous expenses is what? Mm. Miscellaneous expenses, we have what?
22.5.
22.5. But we need to check if there are additional information there. Yeah. Tenement fee paid to local government, that will be allowable. Contribution to Niger Delta Development Fund, allowable. Contribution to Host Community Development Fund, allowable. But donation to Widows and Orphan Association, we haven't received, we haven't, that one should be disallowable. Because donation is not allowable under the carbon. That's 3 million. That will make this to be what? 19,500. So what else do we do? Okay, that's all. So close it out. Okay. Okay, so the summation of all this will give us how much? Oh yeah, the summation is what? Oh yeah, oh yeah, are we calculating it so I can know what I'm doing? Or no one is calculating it?
We are on it.
It. Mhm. Well done.
The total is 611,630.
Which one? 630. 630. Ideally, we are supposed to just go and deduct this summation. But because we have
Ideally, we
CPR
are
limit,
supposed to.
we will have to subject it to CPR limit. Okay? We calculate our hydrocarbon tax relief. 1 minute. So for our hydrocarbon tax relief, sorry, for our CPR limit, we would say CPR limit will have what? One or A, 65% of 65% of revenue. Will have what? 63 divided by 100. Multiply by what? Multiply by our revenue. We calculated it here to be what? What do we have, please? As total income. Hello, are you there?
The total income is supposed to be 1,553,780. 1,553,780.
Mhm. Since all of this are relating to
These all of
petroleum,
these are related to petroleum.
I say 1,553,780. What do we have next? Oh yeah, 65% of it is
You're
what?
going to give
Oh
us
yeah,
978.
65% of it is what?
65 or 63%.
That is 65. I think we calculate with
That is
65.
65.
Yeah.
That is 65.
We wrote 63. That's what I need to confirm.
Okay.
1,009,957.
Okay. So say the total OPEX. The total OPEX we calculated was 611,630. Okay. What do we then do? We had capital allowance. Capital allowance balance what for what? They said what? 51 million. Then 45 million for the year. That's a total of 96,000. Then with less, let's call it statutory payments. The statutory payments are statutory payments we have. We can take it from our SOPL so that it will be fast. We have rent, 13,000. Royalties, and export sales, 69,300. Okay. Royalty on the local, we have what? 9,800. Okay. Aside that, we also have what? We go to our additional information. Here we have contribution to what? Contribution for Niger Delta Development Fund, 12 million. Then we have what? Contribution to HCDF. And what's that figure? 12 million. So NDDC should be 5.5 million. Then what else do we have? Host Community Development Fund. Okay, I've taken that one already. Okay. Still, I don't think there is anything left again. Summation of that is not. Oh yeah, total, please, total. Ẹ má jẹ́ kí kíní máa pẹ́ jù nílẹ̀. Are we there? Oh yeah, fún mi figure ẹ ṣàánú mi. What's the issue with calculating this figure now? We still have a long way to go.
We want the mono long Joe. I'm using my calculator to add it because I can't see the screen of a calculator. Let me use no verse. No verse. 13.
That's 109,600. What do we have?
The total is 109,600. Okay.
So see, 109,600.
Yes, sir. 109,600.
Okay, what else do we have? Okay. What do we have? Sorry. Okay. This will give us coming now. Oh yeah, oh. This is 597,707. Okay, so what do we have? 59,707 is the allowable expenses that will be deducted. What do we have?
Thirteen 923. Hello. 13,923,000.
Is the difference here, Abi? OPEX that we carry forward. What do we have? Or is it that OPEX carry forward? You are calling 13 million.
It should be 597 minus 6113. Abun Koni.
Yeah.
Only 13,923,000. And less it from the 61630.
Don't. Okay, so what do we have? What we are carrying forward 13,923. So with all of that, okay, so having done that, the difference here we refer to it as the adjusted profit of the business. What do we have?
So the job that is just for the adjusted profit.
Yes, sir.
Then
Adjusted profit is how much?
this OPEX, what's the meaning of OPEX?
Operating
OPEX.
expenses.
Eh?
Operating expenses.
Okay.
Okay, we have what? Okay, we have what? $956,073. Then we can now less loss relief. The losses, the unabsorbed losses, the said is what? 35,000. Sorry, after lessing loss relief, we get our accessible profit. Okay. So accessible profit is what? 556 0 what?
953,038.
038. Then we less, we don't have balancing
Right?
charge, capital allowance. Capital allowance, which is brought forward. Okay, capital allowance. Brought forward is 51 million. For the year is
But why do
45 million.
this computation we are doing? Why do we
that
separate it from the body of the initial computation?
you
We
can put it
separated it
here
when we
is
started
because
from
I
that
want to complete the total.
65% of revenue. Huh?
We leave. I separated it because I want to calculate the total capital allowance. You can leave it there also.
Are we
Then
still
we
going back
left.
there?
Let's going back where
So the initial calculation we are doing that, we now
it,
came back to
this is the initial
65% of
calculation we
revenue.
did. We've left 65% of revenue long time ago.
I know we have left it long time ago, but I could see that there's a separation between them. Like
Because
how,
we
uh,
we did that to know what the CPR is now. That's the working. That's why we did it separately. Production allowance is what is the same thing as petroleum allowance, and they say 80 million is what they agree with the relevant tax authority. So with this now, what is the chargeable income or the accessible?
no, we go.
So how much will be
Nine
chargeable profit?
955,862.
955
862.
862. So hydrocarbon tax 30% will be what?
That's 30% of this. Is two eight six
Yes.
seven five 8.6.
Huh?
286,758.6. 758.6. 286,758.6.
286,758.6.
286,758.6. Then education tax 2%, 2.5%.
No. They are not paying education tax. When we are doing CIT for them, they will be charging education tax.
Okay.
This is the tax liability we were referring to the other day. That they will share, that they will now split into 12 and they will be paying every month. Please, can the person mute their mic?
Yes, sir.
Do we understand up to this point?
So this tax liability, said they will paying it every month, Abi?
Yes, if it is based on initial estimate, but if this is based on consolidated account like we have here, no, they would have paid this. All they just need to do now is compare what they pay with what we calculated and know if they have overpayment or underpayment. Are you there?
Yes, sir, we are with you.
So having done this, all we have still done is computed hydrocarbon tax. But what they ask us to do is to compute tax liability. So we are computing CIT also. So we can now say computation of company income tax for worthy of assessment. Since the profit is for 2023, that will be 2024 year of assessment. Okay, to calculate company income tax, we'll have what? So we can either use a simplified approach, but I don't advise this in exam. What will be the simplified approach? I'll say revenue as per hydrocarbon tax computation. That's 1,553,780. What I'm saying is, and I have it this way. So we can then say other income that we did not include in this before, because that one cannot be subjected to hydrocarbon tax. That's what other income, how much? 7,200. Okay, we can then less allowable expenses. Allowable expenses. So we can say hydrocarbon tax OPEX. Hydrocarbon tax OPEX is calculated to be 611,630. Then we look at these expenses and strike out anyone that is not allowable for this purpose. So we have production cost, all of those ones are there. But if you look at it, I think stamp duty on increase in share capital is the only expense that is allowable under hydrocarbon tax that is not allowable under capital gain on assets. So what do we have? We say less that stamp duty. Stamp duty for increase in share capital. Okay, we'll say less increase in share capital we had 1,000. So we're adding it back to it because it has been deducted from it before. Okay, what else do we have? Since that one has been sorted, we now look at, do we have any expenses here that we did not allow because it is hydrocarbon, but should be allowable under petroleum? All of these ones there have been treated. Okay. So that will be what?
Six one to 630.
So after adding those ones, we now look out for other expenses that were disallowed earlier, but will be allowable under capital gain tax. Natural gas fee down is still disallowable. All of these are disallowable. Even improvement to building is disallowable. Okay. Okay, so we have what? Okay. Repairs and maintenance, none of the things there is affecting us. We go there now. Custom duty on essentials disallowable. We have interest on loans. Interest on loan wasn't considered under hydrocarbon. Interest on loans. Interest on loan, how much? 4,004. Then we have allowance for doubtful debts. Allowance for doubtful debts. Allowance for doubtful debts. For allowance for doubtful debts, we have what? The specific provision, which is 10 million. Say 10 million plus bad debt rating of 4 million. Okay, that will be 14,000. What else do we have? Head office shared cost. The head office shared cost, they give us part of the breakdown, the research and development cost. Head office shared cost. Head office shared cost, R&D. How much? 12 million. What else do we need? Okay. Bank charges. Bank charges, how much? Okay, so if that is all, summation is what?
Six four 3930.
643
930.
930. See, this accounts for all of
This
our
accounts for all
expenses.
of our expenses.
So our adjusted profit will be
Adjusted
what?
profit will be what?
553. Sorry, sir.
Okay, so
Before
what
we
do we
have
have?
other
So what do
income,
we have?
I have a question.
Go on.
Okay, the answer is 917050.
917050.
050. I have a question. Assuming they give us balance
Go on
charge,
with your
Go
question.
on with the question.
sir.
Ask your question.
Ask your question.
Okay, assuming they give us balance charge as additional information, I will still add the balance charge to my total revenue, abi?
No, I don't know
No,
why.
I
Why
don't
are
know
you
why.
asking
Why are you
me?
asking me?
Okay. I know sometimes they used to include balance charge to it, that's why I asked.
You mean to
You
calculate
need
the income?
Yeah, no, they've given us the balance charge already. They've given us the balance charge that additional information, they will write their balance charge.
Balance charge for
balance
what?
charge for what?
When I see the question, I will let you know. I know sometimes they will not say there's in the asset of this thing, there's a balance charge of something.
So let's consolidate loss relief. Loss of what? Less loss relief of what? Mm, Loss relief 35,000. So that will give us what?
917
Accessible profit.
Accessible profit.
917 917
917,015. Then with less capital allowance, we have what? 25.
916990.
No. We are
No,
not doing
we are not
it.
doing that yet.
Is it 25 or 50?
Initially, brought
Initially,
forward on
word for
51.
word on 21.
The year is
The year is
45.
45.
So that is why
So that is
they
why
brought it
the
again.
voice is again.
Okay.
That's
That's
96.
96.
No.
That
No,
is
no, no,
this.
no.
You have not made me
You have
speak
not
like
made
that.
me speak like that.
Let me see what I
Let
did
me see
under
what I did
hydrocarbon.
under hydrocarbon.
I made a mistake.
I
Oh,
made
this
a
51,000, 45,000. It is the blessing. We will leave at that one. What do we have?
That would be 9560
Use to
6,000.
calculate it.
is to calculate it.
860038.
860.
860.
Sorry. Hold on, sir. I'm saying 956038 minus
Minus
96,000.
Minus
Okay,
30,000.
minus
30,000.
80,000. Sorry. I did not include 80,000. If I minus 80,000, I will have 78003
780.
780.
780038.
Okay, what do we now have
What
as
do
it?
we now have as
Yes. As
Times
ACT.
30%. That will be 234011.4.
234
34011.4.
01.
011.
Okay, that's so we have this to be what? 51,000, 45,000. That's 96,000. So with this, our chargeable profit will be what? Chargeable profit is what?
Eight two one 015.
I'm coming on.
Okay, sir.
Okay, what do we have?
821015.
821015, Abby.
Yes, sir.
So CIT at 30% will be what? And EDT at 2%. What?
CIT will be 246,304.5.
Education tax. PIT, please. EDT, please.
EDT will be 16420.3.
2% on the accessible on the profit before relieving losses. Oh.
16420.3.
You did it on 917050, Abi. 13.
Hold on, please. It seems I make mistake. One eight three 40.3.
1834.
0,
18340.
yes, point 3.
So that is that on the assessment. Any question?
Um, Mr. Goodwill,
Sir?
good. My question is computation of common income tax in respect of this computation commence from the 65% of revenue, Abi?
No. This is
Commence. Okay.
doesn't have anything to do with that 65. The 65% was
What
a
is the
work
relationship? What is the relationship between two of them?
between what and what?
Is it between common income tax and that 65%?
It has nothing to do with it. Oh. It just happened that where we finished this one was where I just needed space. That's why I wrote it on top of it. It has nothing to do with it. This 65% is to compute CPR. CPR was needed for hydrocarbon tax. Is it clear?
Okay.
So that's that on that. So can we still look at one more question? It will take us time, Sha. Should we look at another question or we call it a time?
Any of it is fine. Hello, sir. Are you there, sir?
Yes, I'm there.
Should we go ahead with the question?
But with what we have done, I think we should just move it to the next time. I actually wanted to finish up today, but I've also been in class this morning shouting, and you notice I've been cleaning and writing since. So let's just move it to the next class. I need to rest a bit and also prepare ahead for my next class. For work tomorrow. Well, that's
Okay, no
Mr.
problem.
Okay, now, thank you. Okay, have a good night, first.
Thank you very much, sir. And you too. Bye.